pain, I think, comes along with volatility. And, you say what you want. The market sold off 600 S&P handles from the all-time high to that recent low on March 14th, pretty much in a straight line. The bounce made sense almost to the penny, as Carter would say. Thought maybe 58 and a quarter. It got close, 50% retracement. And now this sort of resolution of selling, whatever you want to call it, to me makes a lot of sense. The inflation data is hot. Yields backed off, probably on the back of a weaker market. But that recent low of 55.07 or something, to me, is a huge line in the sand here, Mel.
So it was a little surprising, like counterintuitive, right? You get this hot inflation data, and then you get this reaction in the 10-year bonds that is sort of contractionary, right? So you could see both sort of happening. I do have an inflation bet. That probably didn't work out well today. But that was sort of interesting to me. I feel like it was a bit of a overreaction, but that doesn't really matter. We got a very big event coming, as you opened the show with, right, on Tuesday. I don't think there'll be resolution. That will be what we're putting forth.
Right.
Which isn't to say then it's over.
Resolution from the jobs report.
No, I mean resolution from tariff day,
yeah.
right? So I feel like going into a weekend like this, we have this very big event on Tuesday, a lot of uncertainty. I always look to buy when there's a lot of pain, but I didn't buy anything today because I just feel like let's just wait a little more. This VIX, which I know you look at very closely, at 21, it's no man's land. This isn't panicky, right, yet. So I feel like it's going to go higher before it goes lower. Then I will look to buy. Probably too soon, but I feel like, especially that when we talk about the Mag 6, Mag 7, I sort of like those names. They're not, some of them aren't particularly China sensitive at all or tariff sensitive at all. Great balance sheets, good business models, but that, that was a terrible, terrible week for them.
But they are growth sensitive. And to the effect, you mentioned tariff day. We're not going to get resolution. We're not going to get resolution on the economic outlook either with this jobs report. I mean, there's probably still, it's going to be funky, right? Just because the layoffs, we don't know if they've hit. We don't know if federal workers are being counted in these numbers yet. There's just a lot of uncertainty around those numbers.
There's a lot of uncertainty around those numbers. And all we continue to do is get more data, more, essentially updates on how the consumer and sentiment. And we're getting to, essentially record lows on, at least on sentiment in terms of how quickly that delta has moved. Steve Leisman with some great data on that point. But in other words, we're going to talk about spending. We're going to talk about where that's fallen off. Scott Wapner had a great interview with Robert Kaplan, formerly of the Dallas Fed, now at Goldman Sachs, using the stagflation term, using a term that the Fed is so reluctant to do. I thought it was a great interview because it really was very, very open about where we are and where you have seen a quick shift and what conundrum the Fed really is in, and that they probably will do nothing. But the tendency is to want to fight inflation first until that jobs market starts to really fall apart.
Yeah, and I think really what you saw today was this de-risking. I think the big thing that's on investors' mind right now is tariffs, which are happening next week. And everybody came into this week hoping that they weren't going to be as extreme as people hoped. You saw the markets jump on that news. But now realizing, okay, this is going to come to fruition. And yeah, to Karen's point, could this just be the start of it and a bigger trade war and all these retaliatory tariffs that could be coming along? So I don't think we're going to know everything by Tuesday. It just could lead to more uncertainty. That's what the markets aren't liking. So you did get some inflation data out today. There also was some weakness with the consumer, which people are worried about. But I don't think all of the data was bad. Like, really, you're not seeing the consumer fall off a cliff. You're actually seeing savings rates went up to about 4.6%. So people are pulling back, but really, income has been rising faster than inflation. People just aren't spending because they're worried about the rainy day and what they need to go moving forward. They're not falling apart at the seams. I think that would be a bigger concern. I don't think we're seeing that right now.
And she's 100% right, except that, they're saving because they maybe are scared of something.
Exactly.
Correct.
And what they're scared of potentially could be what we're talking about now when they see the stock market have days like this. And Karen is 100% right. As usual, all the stocks she mentioned really don't have any China exposure, but they have obviously broader market exposure, and all the ETFs are in. So if these ETFs all of a sudden are actively traded to the downside, what works for them on days the market goes higher works against them when days it goes lower. And I think to a certain extent that's what we're seeing as well.
Just classic rotation. And anything that has a pulse in terms of high growth, not a lot of profitability, trades at a sales multiple, and people only talk about a sales multiple, those are the stocks that are getting hit. And even though in the last 36 hours we've digested headlines about pharma tariffs and things that are coming for that. And inherently, if you're a staples company, too, you have exposure to what's going on tariff-wise, and it certainly will be passed along. But Staples and pharma outperforming tells you exactly what you need to know. Gold with a fresh high. So this tells you where the market is at. And I do think that there's a case where a lot of people are ready to wait on through this. I don't think we've had anything close to a blow-off bottom here. I think there's a lot of people that actually aren't really scared yet. And that's the concern I have.
Yeah, and utilities also the only sector up today. So how are you hedging?
You know, I'm not really that hedged. I always have some hedge on, but I'm always very long. And to me, I hedge in companies that have excellent balance sheets that can really weather the storm. And, you know, I have some things that are somewhat counter, like this inflation bet, but that actually didn't work today. So I just, you know, endure the pain.